Okay, good afternoon, guys. Welcome to this trading clinic. My name's Steve Ruffley. You should know me from Intertrader and possibly tradermaker.com. So today we're going to talk about the markets, do our usual trading clinic. Let's try and find some good opportunities in the markets. Same thing that we're going to trade today. We'll put a live trade on. That's the kind of difference I'm trying to make in these trading sessions. Is that with a lot of other kind of talk about the markets and how other people present opportunities, that's fine, but what I'd like to do is have a structured course. So I teach people how to trade the markets with my Trade for Life course. I do a lot of educational webinars that support people through this, and then trade non-farm payrolls and another sentiment figure live in front of people. Okay, we had 127 from the non-farm payroll last time we traded it, and I made just under £600. And then today, I'm going to look at the markets in real time. I'm going to specialise in the Aussie dollar today. It has quite good movements, and it trades very technically. So I think it's something that we should certainly try and focus on for the first 5 or 10 minutes. But then after that, again, it'll be a general open forum. Any particular products you want to talk to me about, put them through in the chat window or the Q&A, and we can go through that. Other things to bear in mind in a minute is that I was quoted on Reuters about 2 months ago now, keep buying dips. Okay, I said this, if you follow my Twitter feed, I said it yesterday and the day before. The S&P had hit some lows, again after some of the German data. Nonsense, to be honest. The markets were always going to head back up, and look, the S&P's trading at 1518. Okay, so the markets are looking to buy dips, and gold especially. We've got some key levels coming up in gold as well, so we'll talk about that a little bit later on. But realistically, right now, we've got quantitative easing till infinity and beyond. The ECB, I called it in the last meetings, but it will definitely happen, I would say, in this meeting. They're going to cut rates. So, although the outlook's not great, we're doing a lot to kind of steady the markets, and the markets are reacting. Okay, so I've got a question straight off the block. Ahmed saying that a few weeks ago he said the euro is doomed. Do you still hold that view? Well, the market's changed. I mean, I'm still long-term very, very dollar bullish. In my opinion, the euro... when you say the euro's doomed, I mean, it depends how you look at it. In my lifetime, I'm 100% certain that something major will happen to the euro. And what I suspect will happen, it will get split into the north and south euro. That's all I can see happening. The reasons for this are purely fundamental. Okay, you cannot make Italian people, Greek people, Portuguese people, Spanish people act in the same way as Germans. So the Germans and the Scandinavians are very prudent, pay high taxes, pay the taxes for a start, and have a good quality of life for this. In Greece, it's a national sport to dodge tax. Okay, that's a generational thing. That won't change for years and years to come. People do what the parents did, what the grandparents did. So the situation's going to get worse before it gets better. The unemployment in Portugal and Spain is catastrophically high. Okay, I lived in Spain for a long time, so I've seen this firsthand. There will be people that will never get a job. But unlike the UK, where there's benefits for everybody, although we're clamping down on it now, we've got generations of people that never had jobs. Grandfathers, fathers, sons living in the same house that never ever had a job, survived off benefits. Okay, so that will be the situation to some extent we might see in Europe, but happening later. So will Germany be able to prop up the euro forever? No. In the meantime, is it going to get bought up when it gets sold off? Of course it is. There are trillions and trillions and trillions of euros out there. They're not just going to go away. Okay? But then the idea of the euro and Europe will collapse. If Europe collapses, so what? Europe's a man-made thing. Okay? The EU is just a term. Okay? They've got this union, and the union's only as strong as its weakest link. There are a lot of weakest links. Okay? Look at Italy, for instance. Italy's not even one divided country. Italy's 20 individual little states on their own. If you have somebody, if they're Italian from Sicily, saying, no, I'm Sicilian. So, if the country can't be unified, how can the European Union be unified? Okay, so broad statements. These are just my beliefs. These are just my views. They might happen in a year. They might happen in 20 years, 30 years. But don't kid yourself, guys. These things are going to happen. Okay, they just will. That's just the cycles of the world. So everyone wants independence. After a long enough period of time. Look at Scotland in the UK. Okay, why do they not want to be a part of the United Kingdom? Why do they want their own independent country? What benefit really is that to them apart from power? Okay, so you think the European Union is going to stay together even if things get worse? No, they won't. They're going to bail. Greece will bail, Portugal will bail. These countries will have no choice. They won't be held ransom to Germany, and these reparation payments just not going to happen. These people, you have to understand the history of these countries, and you have to go there, you have to understand. And again, I've lived in Spain for 7 years, understand how these people are. And if they get a whiff or a sniff that they can bail on loans and go back to the peseta, they will. That's just the way these things go. But anyway, I mean, let's get back to the charts, guys. Let's not go off on a random tangent talking about Europe and the fundamentals. We can see what's happening in the market right now by looking at the charts. Let's focus on the Aussie dollar, as I said, because it has been trading technically well. So we can see, we have the Aussie dollar here in the top right. So this is the market, okay? It found good resistance down here at 102972, and it's looking to pop higher. So if you want to trade the Aussie dollar, then this is how I suggest you do it. Okay, now this is how I set up my charts when I'm looking to really analyse an individual product. So today we're just going to focus in this early period on the Aussie dollar. So when I tell people what's the big, I was interviewed by a magazine yesterday, no one particularly of note, but they were asking me what's the biggest pitfall to people that start spread betting and intraday trading. Now the first thing I said is that people, when they think about intraday trading, they automatically think they need to be a scalper. So they need to look at the minute charts to see every opportunity in trade. Now the first problem is when you're trading anything on a spread betting platform is you're paying a spread. So no matter what time you press that button, you're paying the spread, you're going to be offside. So looking at minute candles, you're going to get too much information. Now this is the 5-minute chart here, so change that to a minute chart. Okay, think of it in relative terms. Okay, here's a day, here's a daily candle here. That day is made up of 7, 8, 9 hourly candles, okay? Days down here. So each one of these is made up of a number of these. So the hourly is made up of 4 of these 15-minute charts, okay? So that's a lot of data to take in. So if you're going to flick to the minute chart, how much are you getting? You're getting so much more information, and what's it actually telling you? Well, the market's telling you that it's ranging. Okay, on the minute chart, what's that really telling you? We've got as high as here as 1.3240, okay, and as low as here as 1.3209 on the minute. But how is that giving you a signal? Where would you buy and sell in any of that? So you flick straight onto the 15 minutes here, you're already starting to get some more information. Okay, the market's telling you the same highs and lows that it does in the minute chart, but it's telling you that it rejected it here, it rejected it here. And it rejected the breaking below this support here at 1.3171. So, the likely effect of the market in the short term is going to be going up. So all these like wicks, the lows of the bottom of the candle, are showing that we've tried to touch lower and bring sellers into the market. The sellers have rejected it, pushed the market back up, and are finding support here at 13220. That's what the market's telling you. If you look at all these individual candles themselves, they're not really telling you anything. So what I'd like to do is have just a 5-minute chart here that shows that what the market is doing. That's really like your volatility scale, I would say. So I've got a simple moving average here that shows the market's moving up. Okay, that moving average doesn't tell you anything else apart from when we try and break and close below the moving average, the market rejects it. Okay, then we break above the moving average and go higher. Okay, that's all the 5-minute chart's telling us. So when I say you should intraday trade and what the time frames you should use, is you use 15-minute candles with an hourly view. Okay, so that means that every 4 of these 15-minute candles, each one of these you can use for your entry points, but each 4 closes, each time 4 15-minute candles close, you get an hourly signal. Okay, so if we look at the hourlies, this is where I like to focus and concentrate the majority of my time. Okay, now if you've been watching my Twitter feed, I introduced hashtag Bob levels. So Bob levels are break or bounce. These are key levels in the market of where the market is going to try and hit and test. It's the extremes of the market in intraday trading, and the market will do one of 2 things. It will break through that level and try to hit the next Bob level, or it will bounce off it. Now, I would say of the 20 calls I've made in the last month, 18 were pretty good. I mean, I'd say 4 or 5 were to the pip of when we were breaking or bouncing. Okay, so these are very, very important levels in the market. Now, the way I generate signals, and I generate these lines, People can say they look complicated. Okay, they're not complicated at all. All I use, is when I say use your small time frames, your 15-minute, 5-minute for your volatility and your entry points. You use your higher time frames, your hourlies and above for your exit. So if you're going to look at a chart, okay, you look at the monthlies, you start on the highest time frame you can. What's that telling you? Well, the market is telling us we've got the simple Bollinger Band, 20 periods, okay, so this is your moving average. The market is telling us that we're in between the range. We've got key resistance up here at 1.08000, key support at 0.98490. So we're right in the middle. We're trading right on the moving average. So that's telling us that the market is ready to move in a direction. And the overall trend really, when you look at the monthly chart, is still up. Okay, we've gone from the lows, we've gone to the highs. If you want to do a Fibonacci to see where we're trading, that's an easy part. Okay, so the up move started here, we've got as high as here, so the market really has tried, not really aggressively tried to hit the 50%, because 80% of the time we know a market will look to hit a 50% retracement. It doesn't get as low as the 32, but finds support on the 23.6. So that tells me if the market now on the monthlies was looking to retrace that initial move, it'd have done it by now. So the trend is going to continue. Okay, so that's basic, simple trading, charting analysis. So on the monthlies, it's telling us there's room on the upside. So if we know that the next logical target is going to be up here, the monthly area of interest. But it's going to take some time to get there. So what do? Move down to the weeklies. What does the weekly tell us? Well, the weekly is even nicer. Okay, the weekly showed that the market again has found some tops up here, just above 10556, but then come down. Okay, so we've come down to the lower end of the Bollinger Band. We've rejected closing outside it, so we're moving back up. Okay, so the market for me now on the weeklies is still bullish. Bullish because it wants to touch the moving average. So the market wants to get up to the levels here at 1.3919. Okay, so you can see I'm building it up. Middle of the range on the monthlies, but the overall trend is up. Weeklies, okay, we'll look to be on the lower of the range on the weeklies, so that's telling me you've got loads of value here. Loads of value to buy from here to here. 50, 60 ticks. They want to move up, another 250 ticks up here to the upper end of the Bollinger Band, these other highs. But we're buying into value. Dailies, even better. Bottom left, what does it tell us? Touched on the lows of the Bollinger Band, couldn't really close significantly outside the Bollinger Band, hit this level of support, which is a weekly level of interest, at 102554, bang. Market finds support, market moves up. Okay, so somebody's saying that, okay, we've just got a few questions, let's go back. Okay, we're talking about gold, that's fine, okay, we'll talk about gold in a little bit. If you're short gold, that's fine, but we'll have a look, don't worry. If anybody's short the Aussie dollar, then we'll get worried. Okay, so what's that telling us? On the daily, okay, market's rejected these lows here. The bottom of this move, a hammer formation on the daily candle, you're buying as many Aussie dollars as you can. Buy as many as you can, it's only going up. So logically, we have to see now that we know the market's got room to move up to the midpoint here on the dailies. So let's translate that into hourly terms and something we can trade right now. Okay, so if you're looking at the hourly chart, we know that the market is going to look to test a bob level break or bounce at 103439. The market breaks above that, we've got a level very close at 3473. Above that, the market wants to test 3792 and 3900. Okay, so look at an hourly chart, we see the market really trending sideways, broke out here, these tops, then found support at 1.0286, so the market's going to move higher. To be honest, I've got the Aussie dollar open now, so I'm just going to start buying at a market. Okay, so I'm long the Aussie dollar now, so that's my trade now. I can see that the market's kind of rejected. If you look at this individual hourly candle as well, we just use these simple tools time and time again. Fibonacci. Okay, Fibonacci. It's hit the 50%. Couldn't close below it. It's found support on the 38. Found support on the 23.6. What's the next logical point the market wants to test? It's up here. So not a massive trade, okay, but it wants to test above here. So we need to break these previous highs in the hourlies. Okay, we might see the market come back to 23.6. The next point the Aussie dollar wants to trade and test is here. So that's what I'm going to hold on for. 103439. Long the Aussie dollar. Okay. So that's how you live chart things. That's how you build up your opinion. Okay, we're way above the moving average. We've rejected these lows, okay, the low end of the Bollinger Band. So I'm using very simple charting techniques. A little bit of Fibonacci on the hourlies, weekly, daily and monthly points of interest, and a few Bollinger Bands. I mean, that's hardly the world's most technical trade. But the whole point of trading I keep teaching people is not knowing what other people don't. It's knowing what everybody else is looking at. Okay, so everybody else is using standard MetaTrader indicators or standard charting indicators. Okay, people that use Ichimoku Cloud, 57-day moving averages with a cross, they're trying too hard. Okay, with all due respect, people that do things like that are not clever enough to understand what these charting techniques mean. Okay. And that's, again, I'm making some bold statements today, but this is 10 years of being in the markets, 10 years consistently making money, and being a professional risk manager, floor manager, and chief market strategist of InterTrader. Okay, these things happen, and traders go for these things for a reason. You have to look at building momentum. Momentum comes in, market comes down, can't hit the lows. Momentum comes in, market can't come down, can't hit the lows. What's the market doing now? Broke the highs, moving higher. Where do you think it's going to test? The top end of the Bollinger Band and these levels of interest up here. So our trade's on side right now. Okay? So it's going to take time. It's very unlikely that this candle is going to just go from here to here in the next 43 minutes. But you never know. Stranger things have happened. But we're getting long on a number of technical reasons and by reading charts. Okay? So you have to understand the logic here. Okay, so Stacey's just asking, please advise where you put your stop to be placed. Okay, Stacey, right, well, it depends how aggressive you want to be. Now, I trade without stops. For the pure reason, I'm a professional, I've got a big account, and I don't want to be stopped out by the market. I don't want to be stopped out by somebody telling me when to stop. Okay? But that person's myself, obviously. But I don't want that. I want to be able to manage my position by doing it. And average again in a positive sense or a negative sense. So what you would do is you want to put your stop is, you'd have to look for the next place where the market would look to test and get longs out of the market. Okay? So you'd really do that, you can do it one of two ways. If you say the strong up move started here, down at this low level of support here at 102,709. Okay, so if the market gets anywhere near that for a start, we're wrong. But if you just do a Fibonacci, okay, from the lows to the highs here, okay, we can see quite clearly the market wants to find support at the 23.6. Okay, so what I would say is the market hits the 23.6, okay, it's going to hit the 38.2. So my stop would be behind the 38.2, round about 1.0338. Okay, so that's where your stop needs to be. Again, it's difficult. It's difficult because you risk reward. I'm looking for the market to hit here, so I've got a 20 tick profit, and if it goes above that, here, 50 tick profit. So you need to keep it in relevance. So if you're long from here where we are, you don't really want to be going much further past the 38.2 because you've only got a 1-to-1 risk reward profit to loss ratio. So what I would say is if the market does get down here, okay, that's where your stop needs to be, or you need to be aggressively buying back into the trade for a bounce to the market to go back up. But again, it depends on your risk strategy, it depends how aggressive you are as a trader, Stacey. But what I would say is that if the market rejects these highs in this candle here, then it's going to hit these levels, 23 and 38, quite aggressively to get all the longs out of the market. And you know what it's going to do when it's down here, Stacey? It's going to go from back here to up here. Because that's what the markets do. Yeah, they like to get people out of positions. So we're getting all the buyers entranced in the market now. People are getting long because we've made the higher highs here. But again, unless we get aggressively towards these targets of the upper end of the Bollinger Band at 1.0349, the market can quickly reverse and test these lows before then making the real move and going higher. Okay, so that's why you have to trade off your hourly closes, to be honest. Just because we've been in a little bit of profit for the last 3 minutes, we've got 41 minutes in this trade to allow this hourly candle to close before we can make a true decision if that market wants to go higher or not. So this is where the trading comes in its own. If you don't like holding on to the hourly candles, it's hard. Okay, so it's a lot of information to take in. It's a lot of stress to take on. So flick onto your 15 minutes. Look at it in the same view. So that 15-minute candle closes above the high at 1.32. This Fibonacci here. So where we've drawn it on, that's where we're basing our calculations on these highs here. So the market dips below 1.03261. okay, and closes below that, it's going to have no option but to test the 23.6 down here, okay, at 1.03134 before it then goes higher. Okay, but if it closes above this level here, this 0.0 we've drawn in, then it's got no other option on earth. Yeah, I can't make it any clearer than to test higher. And where's it going to test? These two levels here. Why is it going to test them? It's going to test them because it will. These are daily levels of interest that the market found of interest on the daily charts in the past. When in the past, I don't know, I don't care. Okay, the system draws them in for me based upon my parameters, my rules. But these are logical points in the market where buyers will come back in. Okay, if you don't come back in, you go short on them and you bounce back to your 0.0, your 23.6, and your 50%. So right now, all we're concentrating on is this hourly candle, trying to hit the highs and closing above the 0.0. If it does, then your profit target is these two levels here. As simple as that. So it's up to you guys how long you want to hold a trade for in this instance. As I said to you, I trade off the hourlies, so I can't get out this trade, or I will not get out this trade until this hourly candle closes. That's my conviction. If this candle closes down here, well, there we go. That's the whole part of trading. I have to make a judgment call whether to continue buying more into this position down here, keeping my long view, or getting out. Okay, but if you're trading this way, okay, you're going to stay in positions longer and make more money trading off hourly candles. You can do it by following the 15 minutes, that's fine. But you have to let these hourlies close. So again, this is how it looks. For me, it's going to have to touch these levels up here. I mean, that's just, that's just my view on it. I mean, what do you think, guys? I mean, has anybody traded the Aussie dollar? I mean, is that anybody's speciality? What do they think from this point? Do they see value up there? So I've got some questions coming through. Let me just answer some of these. So I've answered the stop loss. Pan on fire, how do you gauge stop loss? Well, like I said, pan on fire, look to your target profit. So if you're long from here to here, okay, you're looking to make 17.5 ticks. You can't go more than 17.5 ticks offside. Okay, you need to keep your risk-reward ratio at 2 to 1. So you need to be making more on the potential upside than you will do on the downside. So keep your stops in relevance with what you want to make. So this is your profit target up here. Then your stop needs to be, half the distance away, down about here, below the 23.6. Keep it in percentage terms, pan on fire. Keep it logical. Okay, Gabriel's asking, one question. I took an entry because of a signal on the 4 hourly and then leave the signal for the first 1 hour. Is that wrong behaviour? Will that kind of hurt me in the long term? Absolutely not. I mean, to be honest, Gabriel, that's great trading. If you're taking a signal for 4 hourly and then taking your profit out on the 1 hourly, then that's much better trading. Okay? I get a little bit worried when people do it the opposite way around. They take a long-term position based on the hourlies and 4 hourlies and then take the profit out on the smaller time frames. You've got to keep your time frames all relevant. If you're taking your signal off the 4 hourly, then that's taken 4 hours to produce that signal, maybe a series of 4 hours. So you have to give the markets time and room to breathe. Okay, so they're going to breathe. If the signal's taken 4 hours to generate, it might take another 4 hours to go to your target point. It might take 8 hours. Okay, but you have to go off the hourlies because that's a reasonable time frame to go off when you're basing your signals on 4 hourlies. So that's exactly right, Gabriel. I mean, that's really good trading, to be honest. Okay, so somebody else is asking Yildirim. You're planning to buy the Aussie at 1.3060 stop, 1.2930. Okay, so let's see what that equates to. So 1.3060. Okay, what is that then? Okay, so you're planning to buy it down here, 130.60, right? Okay, yeah, well, that's fine. I understand your logic, okay, but then you're going to have to then let the market get back down to there. It might not get down to there anytime soon, and if it hits that, it's going to hit here. So you're going to have to make sure you put your stop in the right place, because if the market's 38.6, it's going to touch 50. Okay, it just will do. That's the way the markets work. So, yeah, I mean that's a good strategy. But I mean, if you're still bullish the Aussie dollar, why wouldn't you buy it on the rationale I've just made? Because if my rationale is going to be right, we're not going to trade below 1.30261, and if we do, then I'll be buying all the way down. Okay, but you know, again, I think we've got more momentum in the market now to hit here before it gets down to here. So I don't quite understand your logic for buying down there. Why did you not buy it down there when it was trading down here? It's already been trading down there. When did you buy it? 1, 2, 3, 4, 5 hours ago? Oh, you did. Oh, you bought down there, right? Okay. Well, perfect. Well then, great. I mean, all you need now is to look for your exit point, and your exit point is what I've told you. Up here at 1.03, 3439. No worries. I mean, that's a good trade. I mean, again, I mean, that you can do that in several terms. I mean, if the market's gone down here, it's broke out the Bollinger Band, it's come back to the midpoint, it's rejected the midpoint, it's closed above the 50% here. So that's a great buy anyway. So anyone that's long from here will be waiting for the market to make new highs here and get up here. So again, guys, you know, it's all about looking at what information you've got available, okay, and trading it in the right way. So we've gone from the 5 minutes that shows the volatility. We know we've rejected the lows and we're above the moving average in the short term. The 15 minutes doesn't tell us that much apart from the market's going up, but the hourlies starts to look a lot clearer, doesn't it, guys? Green, make some new highs, close outside the Bollinger Band, but then come back towards the moving average. Don't really hit the moving average, but then find support above 1.2866. Market then moves higher, and we know that it wants to hit 103,439, and that's how you make it. Okay, guys, so that's the Aussie dollar. Okay, so that's the first kind of, you know, 27 minutes this particular trading clinic taken care of. I think we've spent enough time on that. We know our defined targets. Take a screen print of that if you want, guys. You can keep hold of that information, and you can see my levels on the hourlies. They're all still valid. Okay, so let's talk about gold. That's what everyone wants to be looking at the minute. I've already made a call on gold this morning based upon, we're on a key technical level on the monthlies, to be honest. So I'll show you exactly what that means. Okay, so we know the stock market's making higher highs, so you'd expect gold to be selling off. But gold's not finished selling off just yet. Okay, so this is the hourly chart on gold. We can see, looks a bit complicated with the lines. It's going to get a lot worse, but bear with me. Okay, this is the monthly. Okay, yeah, I know what you're going to say. Too many lines, you can't understand that. It's just to understand the bigger picture. Okay, the bigger picture is gold has moved from here to here. Okay, a lot on the monthly charts. Okay, so what it's tried to do is broke through this key level of support here at 1570 spot 2, and it's aggressively gone lower. Why has it aggressively gone lower, guys? It's gone aggressively lower to the 38.2%. Yeah, Fibonacci. So the Fibonacci I've taken from the start of this green candle to the highs here on the monthlies. So, surprise, surprise, it's rejected the 50% and it's closed above the 38.2. So that tells me if it wanted to make a big retracement, it had got way down to 1156 by now if it's going to do that retracement. So right now it's pushing back up against them people that are still shorting gold, and we're going to see a little bit of a bounce. For how long, I don't know. But what you do then is go to your weeklies. So you look at your weeklies. A few less lines, still looking fairly messy, but key support here. Key support at 141871 in gold. Now, what I was saying within the call in the markets before is that gold is popping above the weeklies and monthlies on this 50% Fibonacci retracement. So for me, gold, before it confirms the down move and continues to move lower, it's going to have to find points on the high side. The high points for me are up here. So I think gold realistically could hit the 61.8%, so round about 1478.04 before it moves lower. Show you why by going into a better time frame. Okay, dailies. Okay, so dailies. Again, still got a lot of lines on, but that's because we've seen a lot of interest in gold at the minute. We've kind of zoom out. Okay, you can see that really, okay, there are less levels on the high side than the low side. So there's a lot of interest when gold starts hitting low. That means a lot of people are going to be buying the dips. Okay, so on the dailies, what we're seeing is that the market has pushed through the 50% Fibonacci. Okay, so it closes above that, this level here at 14461 on the dailies, then we're going to have to see the market try and hit the highs. So the key point for me, if the market continues, okay, to hit towards 147804, I'm not going to buy gold until that. Okay, I'm not bullish enough gold to be buying into this small bounce here. What I'll be doing is I'll be looking how the market reacts around this 61.8 and this 1478.04 level on the dailies and on the hourlies. And if we start to reject them highs, then I'm going to be selling back. selling back into that recovery. The market's moved a lot, very, very aggressively on them 2 days, and we've recovered to the 50% mark. Okay, so the 50% mark means that anything that needs to have been priced into gold has been priced in now. Okay, so that's all the value of selling gold for the time being is gone. We've come back in, we've hit the 50% mark, so it's all about where we close today. If we close in between these two levels, okay, see what the momentum in the market looks like. So I'll be looking to sell gold at 1462, 1478. Okay, so that's why I'm building this view up. We've run out of momentum on the recovery. Okay, so we're looking for sellers to come back in. But 1, 2, 3, 4, 5, 6, 7, 8 up days in gold. Yeah, we've only managed to half get back the losses of them 2 days. So it took a long time to creep back up. So for me, I think we're going to find a top in gold on the short term. It's going to come back down from these levels here. So take a screenshot of that, guys. Put it in a Paint document. Put it in a Word document. So if we go back to the hourlies, less lines, a lot clearer. But we can still see what our targets are. We can see how we've found good support. Look at it to the pip on the 50%. That's why gold is rallying at the minute. Okay, there might be some fundamentals. It might be the odd, again, bit of fear in the markets throughout, through the data we've seen. But realistically, it's trading technically. Okay, the market is still massively bullish on the monthlies. So again, it's ticking up nicely, taking away them previous losses. And again, it's found support on here at 14461. So it's going to have to hit 1462, 1471, and 1478 perhaps before it then attracts some sellers into the market and moves back down. So short term, if you're long gold, it's going to test, I would say, definitely 1471. Okay, 1471 is your target. What it does from there, I'm not sure. It could break through and go higher to 1510, but I'll be looking to sell gold round about these levels here, 1471, 1478. That's where I'll be more comfortable, selling back in to that overall down move. Because remember, guys, there's no shortage of gold. Yeah, there's no physical shortage of gold. You can buy gold on the Tokyo streets. Okay, you can get them out of vending machines, cash for gold. How much gold has been taken from personal usage and melted down and sold? There's no physical shortage of gold. So for me, gold in the medium term, should we say, has still got plenty of room on the downside. Okay, guys. So let me just get back to some of these questions. Okay. Okay, yeah, Tommy, so you want to ask about what's perspective on the dollar versus Swiss. We'll come to that in a minute. Let me just answer the other questions. Hi, Steve. Possible to get your MT4 plugins, see the lines, info, please. They are pivot, spot and resistance. Mohammed, I did offer this before, but unfortunately with the changes to MT4 that's been released into the press, I'm not allowed to give it away anymore. It just doesn't work, unfortunately. So sorry about that. Paul Votch is saying, hitting US initial claims 339, survey 350, prior 352. Yeah, I mean initial claims, yeah, okay, well, people are still struggling to find work. I think that's pretty much priced into the market, to be honest. And then Mike FX is saying, perhaps buyers see this as a bargain to buy back in. Well, exactly, Mike. I mean, that's the other worry that I have. That there are still bargain hunters. They're saying there's a lot of people in China, in the Asian markets, that have seen this dip in gold to see a resurgence. So buying dips. So that could also happen. But I'm just telling you my perspective. I'd be happier selling, them higher levels and waiting for a bit more of a selling inertia to kick in. But absolutely, I mean, in the stock markets, all they keep saying is buy dips. Okay, we've got the promise of quantitative easing till infinity and beyond. So where's the fear in the market? We had that terrible non-farm payrolls, 88,000. Market, we traced 80% of that in the first day. So markets have made higher highs from there. Buy dips. So yes, I can imagine, and I totally agree, Mike, that there might be some bargain hunters that might push gold back up and find some bargains. But again, that's why we've all got different opinions. Okay, Durov's just asking, what are all the dotted lines? Well, as I said, these are levels of interest, okay? So daily, weekly, monthly levels of interest. Okay, so that just means on the higher time frame charts, markets have found value around here. Okay, so my charts look complicated, but they're not, guys. Okay, look, I've got stochastics, MACD, RSI, and the closes. All these are the normal indicators you have in MetaTrader, just turned into an arrow. So stochastics on the monthly are bullish, on the weekly negative. Okay, the MACD positive on the on the daily, negative. That's all they are. They're no more difficult than that. You can overlay these indicators however you like. Okay, so the RSI is looking to go positive on the weekly. So in gold, again, we're seeing more green than red on the indicators higher time frame. So we could see easily, these levels hit. We could see the 61.8% hit, and look at all these lines. All these lines mean that people want to get involved in it. So if we break through 147804, people will be buying here, here, all the way through here. Okay, that's interest. That's what I mean by levels of interest. People want to get involved. Here, there's a gap. So between 1478 and 510, nobody's interested in gold. So whatever the market direction is, by that point it'll be bullish. People won't care. So the market will drift up to 510. Okay, until we hit these levels where there's a lot. And the more prominent the line is, like red lines, obviously mean not danger, but more important. So yellows are Fibonacci's, reds are lines, dotted are just where people have found interest. So if gold's going to continue up and it breaks the 61, you could quite easily see gold get as high as 1554.90 and above, maybe 1570. Okay, but initially I'll be a cheeky little seller around the 61.8, but we'll see. It might not be a long-term position. It might just be a short-term scalp and let us get back down to 1444. Like I said, guys, I can only open the door and tell you where the market's going to go. I'm not going to tell you how to trade it. That's not my job. Your job's to trade it. My job's to make charts more transparent and make data transparent. Okay? So that's gold. So what's happening in the Aussie dollar? Oh, surprise, surprise. Okay, so the market's gone up. It's looking to hit our targets here at 103346. Again, top of the Bollinger Band, we've still got 13440 as our target. Okay, so anyone that's got long the Aussie dollar on the back of my charting analysis, pat yourself on the back. You just made some money. Okay, so that's my 25th live consecutive winner in front of people. So again, when people on FX Street tell you about live charting analysis, they tell you about what's what, at least Steve Ruffley's gone out there with his own account, his own money, putting trades on in real time, and not just telling you what he's doing, telling you where the market will go. Okay, so, these things are fairly unique, guys, and get it while you can, while it's free, because I don't know how long I'll continue to do this, to be honest. Alright, guys, we've got about just over 8 minutes. Has anyone got any questions or any thoughts on any of the products you'd like to go through? Sorry, I'll go back to Tommy, I didn't forget you. The dollar versus the Swiss. Sorry, mate. Dollar versus the Swiss. Okay. What we're seeing here is we're seeing a market that trades very technically, because these white dotted lines are 50% retracements of previous Fibonacci extensions. Now, they're not just extensions of highs. They're a bit more complicated than that, but that's irrelevant. What the market's telling me here, Tommy, is the market's come back here to 0.94259. It's rejected the lows once, 2, 3 times. Okay, so the key bouncing point here is this level, Bob. So 0.94385. We've rejected the lows of the Bollinger Bands, so it naturally wants to get back to the moving average. Okay, that coincides with another 50% Fibonacci technical level. So for me, in the short term, I'd expect the market to break through this and to hit 0.94530. Above that, 0.94621, and then really the top end of the Bollinger Bands getting as high as 0.94881. Now the trouble is, when you have a lot of lines, it's difficult to understand what is a key Bob break or bounce level and what's just noise. So what you want to do is trade it technically. Every time we're below the Bollinger Bands, look here. Market rejects, hits the moving average within 2 hours. Here, rejects the lows within 2 hours, hits the moving average. So logically, what would you expect the next candlestick pattern to look like? The market might close around here. If we close above 0.94369, yeah, the next candle is likely to be green and close up about here. So if you're going to go long, wait for a close on the hourlies above 0.94369, or get long now. Get long now with a tight stop. Yeah, because if we pop through this, we might trade sideways, but it will want to hit the moving average. It has nothing else in its mind apart from trading technically, because it's done it in the past. Low end of the Bollinger Bands, 2 hours, bang, hit the top end of the moving average. Sorry, the Bollinger Band. Lows here, can't close outside it. 2 hours, near enough the top end of the Bollinger Band, but it definitely hits the moving averages. Okay, we're quite wide on the Bollinger Bands here, so we're at the extremes of the market. We've rejected the lows 3 times. Okay, look at the wicks. Wick, wick, wick. So support comes back into the market here. Okay, so as long as you keep buying above 0.4302, then the market wants to get up here. That's 22 ticks. Above that, who knows? It might hit here, 46 ticks. Okay, so if that's what you want to trade from, keep your stop tight. Okay, you're only going to go offside, 5 ticks, 10 ticks here, and you're going to look to make all that profit up here. Okay, so if we start trading below here, these two levels here, then you want to get out. But again, wait for this hourly candle to close. That's my advice. If that hourly candle closes bullish by rejecting these lows here, then get long. Yeah, get long with your profit target of here and here. Okay, so that's my advice, or that's my view, I would say, Tommy, of the dollar versus the Swiss. And again, on the higher time frame kind of indicators, closes all bullish. Okay, stochastics bullish, RSI neutral. The MACD's negative, but you're never going to get all the indicators in your favour, are you? Unfortunately. So how do you gauge the level of interest? Well, that's what I said. The level of interest, all these levels, all these lines are a point of interest, okay? A point of interest based upon my technical analysis, but they can get a bit messy. So really, if you want to kind of break them down a bit and just kind of, go onto a 15-minute chart and just see. The market's found support here, okay? So the next point of interest in the market, if it's going to continue to move higher, is 0.94530. That's it. Okay, the market doesn't want to do any more than that. We're basing that on the hourlies, remember? So the hourlies, we've got a long way to move up on the Bollinger Bands, but it ties in with that level still. Okay, so we still see that gap as a potential profit target. So the 15 minutes looks a bit better, doesn't it? Market's moved down, rejected, so we need the 15 minutes to close above 0.94369, and then its target is to close above here, and then hit here. Simple as. Okay, so that's when I say, the charts look very messy on the monthlies. Look at that. You can't make anything from that. Weeklies comes down, look a bit clearer. Dailies, okay, getting better. Hourlies, yeah, okay, now I understand. But all these lines are drawn off the monthlies and weeklies. There's just a lot of them. So you have to trade them on smaller time frames to get the benefit. So when you go down to the 15s, I mean, come on guys, that's easy trading. That market's rejected the low here at 9420. We've closed above 94205. So where's the market going to hit? Here, and it does. And it bounces back. So that's your next bob in the dollar Swiss. It's going to break or bounce off that level. If it bounces aggressively, it's going to come back to here. If it doesn't break above, it's going to get to here. It can't do anything else. It cannot do anything else. There's nothing else in between it. And obviously there's other people's levels, other people's analysis, but I just have the confidence in my charting analysis to know what the market may or may not do. So that's all we do it. Okay, so Tommy, do you think of reaching the 9542 level? 9542. 954. Yeah, I mean, absolutely. Yeah, of course, but I mean, it's going to take time, Tommy. I mean, these things, the markets take time to build momentum. I would say in the short term that you want to build a long position anywhere below the moving average, because once we move above the moving average, yeah, and close above it significantly, the market's going to look to test the upper end of the Bollinger Band and break it. So get as long as you can now, and if you want to get your target out up here, you're going to have to hold it for a couple of days, mate. But, we're taking a long-term view. These might be the low we're going to trade for the next week. So I see plenty of value down here. Okay, but again, be careful. We've rejected, closing above this. So let this hourly close. Before you put a trade on now, let the 15-minute candle close or let the hourly candle close and then make a decision. So we find value down here. Okay, so anywhere above 0.94259, we find value. Okay, only time for a really quick one. Euro dollar. Okay, euro dollar breaking the highs. So we found break of bob levels here. Okay, so the market's tried to test through these and rejected it. We're still, again, we rejected the upper end of the Bollinger Band. So all this here is just space. So there's no particular buying or selling bias here. Markets broke up. What I would say is, if we found key support around about 1.03587, if we keep closing above that, these highs will be tested again. To be honest, my view, I'm still dollar bullish, okay? Still dollar bullish, and I will be for some considerable time. So I'm staying away from the euro dollar for the time being, because I don't see any value in it. But, again, take a screen print of them chart, guys. If the market's going to move up, it's going to test these highs here at 1312, 1388, but until we kind of test back to 130587, I don't know. I think the market's going to move sideways. I don't see any value in trading the euro dollar right now, to be honest. I know I've only spoke about it for 30 seconds, but there's nothing on that chart that screams buy or sell to me. So, do you know what I do? Put it back in the pile and look at something else. That's what I do. That's why I've got all my charts set up like this. Maybe I'll trade short on the S&P. Close below 1580.88. Yeah, my target will be down here at the 50. 1579. So only trade markets that look attractive, guys. Don't just trade things because they move. Sorry, guys, there's pretty much time. You know, I've somewhere else to be, I'm afraid. So, Steve Ruffley is the Twitter feed. I recommend you all follow that because while I continue to offer free break or bounce levels, I'll do it in any market that I see of interest. And again, if you send me a tweet, I will answer it. There's no problem with that. How long I'll answer it for, I don't know. So break or bounce are basically key levels of interest in the market, and they work, guys. I've just shown you how to do it in live real time with the Australian versus the dollar. We're still in profit. Where I'm going to take that, I don't know. I'm going to let it run for the time being, at least till the hourly closes, as I said. But we're on side, guys, and we've got a nice little bit of profit to play with, expecting that market to break higher. So that is the way I approach the market. Multi-time frame trading. I use very simple indicators. They may look complicated, but they're really not, guys. You know, it's higher time frame, daily, weekly, monthlies, based upon hourly charts with a 15-minute view. Okay? All right, guys. Well, listen, I'm not a difficult man to find. Google Steve Ruffley. You can always find me. Thanks to Maud. Thanks to Vicky at the guys. I'm glad you all enjoyed it today. Again, we've made some more money live, so I can't really say much more than that. Okay, guys, well, like I said, Google Steve Ruffley, you'll be able to find me. I'm always doing live webinars, so you'll be able to find me probably after this next hour, to be honest. So, all right, guys, listen, have a great afternoon, happy trading, and it's been a pleasure. Thanks to FX Street, Maud and Vicky. See you all next week. Goodbye.